we are moving into exploring how digital assets are stored and secured across self-custody and what custody actually means. And that is across exchanges, cold wallets, hard wallets, and essentially who holds the keys. So we are joined by our moderator today, Charis Chan, Product Manager at Chainalysis. And Charis, you might do a little bit of an intro as to what Chainalysis is. And I believe Callum touched on it a little bit in his last presentation. Charis, you bring so much experience across law enforcement and traditional finance. You've been at Chainalysis for a number of years and you help organizations track illicit crypto activity and manage risk on the blockchain. So I will bring the stage to you, Charis, and you are joined by Ryan Hodges, CEO of Zodiac Custody Australia, and Harrison Connor, Managing Director at Ledger Australia. You are welcome to take the stage.
Amazing. Thank you so much, Amy Rose. Appreciate the introduction. Happy to be here. Welcome everyone to this session, Who Holds the Keys? So in this session, we'll delve into how digital assets are stored and secured across self-custody, exchange, and institutional custody. And more importantly, what this actually means when we think about risk, security, and control of our digital assets. Now, Amy Rose already introduced me, very, very lovely introduction. So we're a blockchain data analytics company. We work to build trust and transparency in blockchain technology. So we work with both industry and government agencies around the world. With me, I have Ryan Hodges and Harrison Connor. And before I hand over to the gentlemen for them to do a intro of themselves as well, I want to share and paint a little bit of a scene in terms of the bigger picture when it comes to digital asset and what it means for you. So at Chainalysis, we analyze a lot of blockchain data every year. So we help people understand the trends in this space, what it looks like, what are the changes, and help essentially organizations across the ecosystem to make informed decisions. So SwiftX mentioned us earlier. We're seeing greater adoption in this space when it comes to digital assets, but we're also seeing threat actors take advantage of this growing ecosystem. To quantify that for you a little bit more, in the last year alone, the value received from illicit addresses, was around $154 billion. Now that's in USD. So that's around 220 billion in Aussie dollars today. It's a significant amount and it is a low bound estimate. So I want to put that into context for you. And now that I have your attention, I think context is really important in this space. That figure represents only around 1% of all digital asset transactions in that year. And yes, that means the vast majority of activity in this space is legitimate. So I don't want you all freaking out now, but it's important to have that bit of context. So you're probably thinking, okay, why does that matter? Because that 1%, give or take 1%, includes scams, stolen funds, amongst many other sorts of crime that can impact our ecosystem. We break that down in our crypto crime report if you all want to learn more. But coming back to what I was saying before, the dollar value is significant. And as more everyday people participate in this space, understanding how to protect yourself in this environment is very important. Now, understanding who holds the asset, who's responsible, may not always be clear. And that's why we're here to break it all down with you, with Ryan and Harrison, who is very knowledgeable in this space. So we're very lucky to have them here today with us. Now, I'll hand over to Ryan to do a quick intro and then Harrison afterwards, and we'll kick off with some questions.
Sure. Thanks, Charis. For anyone I haven't met, my name is Ryan Hodges. As Amy Rose and Charis said, I'm from Zodiac Custody Australia. So I'll do, I had a lot of bullet points. I'm going to shrink them, so for speed. But look, Zodiac is an institution-first custodian. What that means is we look after companies that manage digital assets. So we are built for banks, financial institutions, brokers, equity houses, ETF providers, etc. And, today we're 7 years old. We operate in 6 markets globally. Australia being here, we've been here for 2 years now, so it's very new for us, but a very, very strong market. And I guess one of the great things for us is the regulation coming through. It's really going to firm up how digital assets are managed in Australia. Biggest thing today that hopefully people take from what we talk about is that, there are options around managing your digital assets to do it safely, and you can reduce risk. Risk is always in the background, but it's a thing we're all managing safely. And I think just going from what Callum said at SwiftX, I'm a customer of SwiftX, and they are very good when you actually reach out to them for a scam. They are quick and off the blocks, and they'll tell you direct. So definitely take that option when you're doing something like that.
Thanks, Ryan. Thanks, Charis. So my name's Harrison. So I run Ledger Australia. So for those that may not know Ledger is a French company that's been in the crypto world for a very long time, started back in 2014. And we operate in the self-custody arena. So we're kind of building hardware-based infrastructure and now kind of getting into the software side with the Ledger wallet as well, and really building the secure ecosystem for individuals to operate self-custody for the funds that they may not want to have sitting on exchanges, and then building that safely in the ecosystem so that they can buy, sell, stake, swap, and do kind of all the interactions that you may do in the kind of broader crypto ecosystem in DeFi, and doing that in a very safe way. So I've joined Ledger only very recently, so back in November, and the first hire in Australia, and is part of a large push for us into the Australian market. And really excited to be here today and talk about some of the great stuff.
Amazing. Thanks, Harrison. Thanks, Ryan. All right, let's dive into the questions. So, Ryan, we'll kick off with you first to get us started. Help us understand what custody is in relation to digital assets.
Sure. Look, I guess at its core, custody is the safekeeping of digital assets. So if you think back to, can't remember whether it was Callum or someone else was talking about, wallets versus bank accounts. If you think of the really critical part of how people manage their capital, their fiat within banks, we're trying to do the same with digital assets. So we bring that safekeeping piece. Now, there's two primary models around custody. One is self-custody, in terms of you own that yourself, you're managing the private keys, you're retaining full control of those assets using hardware wallets like the Ledger Signer, I think is the new one that Harrison was telling me about the other day. I have one of the old Ledgers, probably not the fancy one, but that's one side, and that's really critical for people that want to manage the assets, have full control, and really is around risk appetite as well. The other side of it, which is where we come into play, is that third-party custody. So you're entrusting your assets to, a specialized provider who manages the wallet infrastructure, the asset segregation, governance, et cetera, et cetera, et cetera. I guess the other one, which is sort of the hybrid, is where many investors hold their assets on exchanges. So that's another commonly used model where they don't want to do the custody themselves. They don't go through another provider, but they hold it on an exchange, and the exchange manages that risk for them. As I said before, I think each option has merits, and it's really dependent on your risk appetite. A lot of our clients manage assets of their clients, so it's critical that they manage through a custody provider like ourselves. But if you're managing your own assets, then really it's about how comfortable you are managing it yourself, all the risk and protocols that you've got in place to meet that. And that's really how it works. I guess the most critical point on the custody side is that there's a lot of regulatory developments happening at the moment, which means the digital asset providers in this market have to really raise what they do from a governance and risk perspective so that they can control those assets and meet the requirements of the regulators. But I think what it's doing is it's just making it comparable to how the banks manage assets and cash. So it's a really good thing.
Thanks, Ryan. Appreciate that. That's really helpful context for the rest of the chat as well. Ryan, are you able to walk us through how Zodia approaches the management of digital assets, and what does that process actually look like in practice?
Sure, yeah, I can do. So as I sort of said before, we're a regulated institutional grade custodian, and what that means is that we take over those assets on behalf of clients, and we manage everything from the wallet infrastructure where those assets are held, the key ceremonies, those private keys, and then all the way through to, the risk protocols that we use in terms of when those assets move around. So we obviously use chain analysis as one of those, but the biggest thing for us is the storage of those assets to make sure that every step through that phase, we've got the best security available, those assets are locked away. And then if we're trying to move through the phase of those assets moving out, then we go through all the risk controls. We're checking whether it's the right person in terms of maker checker. We're overlaying things like, is this the right time for Harrison to be withdrawing the assets out? So we do all those things as well in the background. And the biggest thing there is that we've got that bank grade architecture that sort of sits behind, which is, segregated bankruptcy remote, and it's got strong governance behind it. And so what we do is essentially cold storage, MPC, and strict key management controls to bring that strength of a bank-grade infrastructure to digital assets.
Great. Thanks, Ryan. I feel you've really teased out some of the points that may not necessarily get talked about regularly when it comes to digital assets or custody and what the mechanisms in place are available. Harrison, I'd love to bring you in here as well. Is there anything you'd add in terms of what Ryan has shared on what custody means, and particularly from the perspective of the individual user?
Yeah, absolutely. Yeah. So I think Ryan touched on a bunch of fantastic points. I think the way to think about, how we kind of think about custody at Ledger, and we kind of come from the ethos of, having, a level of freedom in the digital age is a great thing. And so, having various options as to where you store your funds, whether that's, storing it on a Ledger device, which gives you a level of autonomy and control over your assets, storing them on an exchange, and then obviously on the institutional level and kind of backed by some of these is, Zodia and the team with Ryan, is the way that we think about it is, having digital freedom is a great thing. And so what we really aim to do is kind of build a very safe environment. And I think I heard a little bit at the back end of SwiftX kind of talking about in this kind of digital age where, on the computer, the threats are getting greater, the level of sophistication has never been higher. What Ledger really is at its core is, yes, it's a wallet that is, securing your funds, but more so than anything else, and Ryan touched on this very earlier, is we kind of think of them more today as signers. And so the easiest one we talk about today in the context of digital assets is signing transactions anytime you actually want to perform an action with your funds. So you want to buy an asset, you want to sell an asset, you want to do something in DeFi, you want to stake or swap. Anytime you actually take an action on your computer, that is backed by signing the transaction on your device. And so what that does is kind of two things. One is it actually slows down the process, and such that you have to, in some ways it's cumbersome by design, but obviously these things have gotten a lot better in terms of the usability, but it is really designed to actually give you a moment to think and actually look at the screen and verify that this action you want to take is something that you want to do. And I think in this digital age, that's a really great thing because everything moves so fast, everything's kind of immediate. And so that gives us a second to pause. And then the kind of second thing there is that, Ledger is built at its core based on security. And so everything from the ground up, from the secure element chip in the device, from the way that we present transactions, from the way that our software ecosystem is, it's not a very, not any actor can kind of operate using Ledger signers and such that, when you're operating within the ecosystem, you're operating in somewhat of a permissioned environment, and it's providing clear signing. And so what clear signing means is that it's really telling you in plain English what it is that you're signing and whether there should be any risk associated with that. So these kind of pieces over time, Ledger started in 2014. It was a very different company back then, very different hardware to what it is today, is kind of building this this protective suite around the user to allow them time to think and take thought to when they perform actions. Obviously today it's, very well known as being, pertinent within, digital assets. I think what a lot of people actually don't really know about Ledger and kind of the devices as well is that it can actually be used across a broad range of applications. And if we think about our digital identity, so if we think about two-factor authentication, we actually see a lot of users today, and this is something that, we partner with the exchanges on, is actually using Ledger as your two-factor authentication. So again, the main thing to remember here is that this is a device that is not on the internet. When you set up the wallet, the seed phrase and the private key never touches the internet. It's all generated from the secure element chip, which is used in passports and sophisticated credit cards today. And so what that provides is in many ways, from a self-custody point of view, the highest level of security you can get, which is used across digital assets, which is used across digital identity. And then, not a talk for today, but when we kind of look at the age of AI, where things are getting even more sophisticated, how do we actually prove personhood and in this digital ecosystem. So yeah, they're kind of the points that I'd maybe add to what Ryan mentioned.
Perfect. I think that gives a really thorough insight into what Ledger is and sort of the builds into the ecosystem. Ryan, circling back to you, from your perspective, we've touched on quite a few points here already. What should our audience be considering when it comes to securing their digital assets? And I know Harrison mentioned some of this as well, so I'd love to get that from your perspective as well.
Sure. The phrase that's often said a lot is do your own research, and I think that applies to custody, self-custody as well. I think there's so many options out there. And I think, utilizing strong companies like Ledger and exchanges like SwiftX and Zodia, ones that are well known in the market, they have strength, they have brand and presence. I think doing that and really understand the options before you make decisions. I think be clear on your risk appetite. Like I said before, like what is it that you need to do in terms of safety of those assets? As people go up the curve in terms of value of those assets, you obviously get more nervous about where those are held. So make sure you do that properly. And then consider diversification is key as well. So, if you're utilizing, exchanges, but like maybe spread across exchanges, maybe use a Ledger device as well, maybe 2. I know people that have 5 of them, or look for, other safe havens for those assets. That risk is ever present and growing as this market grows. And so there'll be many, many more efforts, to take those assets off people. And I think assess those providers, carefully and regularly, which means, as this industry evolves quickly and with legislation coming, some of them will push forward and be much stronger in this market and others won't. So just be careful about what you're doing there. And then I think, review the terms and conditions carefully, understand your access to assets, understand how those assets are held, and understand your options in terms of withdrawing those assets. That's really important as well, because I think some people go into it, don't realize, and then they want to access those assets off various approaches and they can't get them. The only way you'd get it is straight off the ledger. Sound like I work for Ledger here. So, I think, but I think ensure your custody strategy meets, what you need over time and that risk appetite, regularly reviewing it. It's not a set and forget. You've got to.
Fantastic. So I think we touched on, what custody is, what are some of the options available on the market at the moment, and the next question that I have is actually something that always gets a lot of interest. Harrison, I might throw that your way. What are you seeing in the market right now when it comes to common mistakes that people are making, and what does good practice look like?
Yeah, it's a great question. I think this is like a general way to think about it. I think there's kind of like multiple things going on in the market at the moment, which is only getting more sophisticated, as we've kind of mentioned previously. I think the first piece is, and this touched on a little bit, I call it the end of the SwiftX, chat as well, is like the need for urgency. So I think, when you're navigating the internet, when, you're utilizing digital assets or kind of just operating across social media or in your email, anytime there is kind of a sense of urgency in a message, or it's kind of requesting you to do something, the comment, something that I've been getting a lot recently is an urgent message that my subscriptions have lapsed and I'm going to lose my data and I need to urgently update my credit card details. And, I'm someone that works at a security company. I kind of live in a state of, constantly being anxious about security and always thinking about these things. And even when I see these emails, my first immediate thought is, oh my God, like what the hell I've missed something. And so, really, I think the really kind of thing that we're seeing is a level of sophistication that is kind of digging into the psychology of the average person, that even if you are conscious of security, you are somewhat being tricked into a state of fear or anxiety that is going to actually prompt you to potentially do something that you would not do in a rational state. So that's something that I'm seeing a lot. I think, my mother-in-law recently had an incident where, she clicked on a link in Instagram, which was around investment advice. And she is normally someone that would have absolutely no interest in this, and she kind of made a mistake. And the key thing that happened there is that all happened so fast, so that when I spoke to her later, she said, I didn't even think, I kind of like, it looked great. I clicked on it really quickly, and then I signed up not really knowing what I was doing. And, within 5 minutes, I had some money taken. So that's really a common piece. I think, like, again, when we talk about, security, whether it's, it's custodians, whether it's self-custody, security is kind of designed to be a little bit cumbersome. And so, the other piece that I see a lot, is kind of not actually wanting to take the necessary steps to be secure. So, when we think about, ledger devices, people kind of, seeing the slowness of the, needing to sign a transaction as being somewhat cumbersome, but actually in many ways that's a feature, not a bug. And the same is true across custodians, and the same is true across exchanges. And so really understanding that the systems here are designed to, set up the necessary guardrails to actually, if you actually do go into a state of anxiety or, urgency, that, it actually is preventing you from taking action in an immediate way, which is really important. I think the other piece as well is, the kind of, the sophistication of attacks or the sophistication of social engineering is getting better than ever. And so, we're kind of seeing this across everywhere where really, we're seeing a lot of hacks happening all across the place. But realistically, when you look at all these hacks and you look at, there's a lot going on in crypto at the moment, they all actually derive from a social interaction. So there was a very sophisticated attack that happened with a protocol called Drift Protocol, which actually started from meeting a team at a conference. And over a 1-year period, this team had basically built a friendship with this protocol. And then over that time, they had kind of infiltrated them. And so, again, needing to kind of be very conscious and aware of what requests are being made of you and being highly skeptical of those. And utilizing the tooling available, whether that's an exchange, whether that's going into your banking app, whether that's going onto your ledger device, and actually saying, okay, how do I verify this request? And with the tools that I have, can I actually verify it from there? And so that's kind of, that's what I'm saying. That's kind of how I'm thinking about it at the moment.
Thanks, Harrison. That's really helpful. So it sounds like do your research, understand what's actually happening, take a breather before taking any action is what I'm hearing.
Yeah, exactly. Just take a moment. I think it's more important than ever to actually just take a little bit of time before you perform any action, whether that's in digital assets or across the internet, because nothing. If it's urgent, then that should be calling up your risk signals in your mind.
Absolutely, that's very insightful. Thanks for sharing that, Harrison. I think we're nearly at time, so I'm gonna wrap this up. Great to have you on here, Harrison and Ryan. Really appreciate the valuable conversation. For our audience here today, I hope this session has equipped you with a bit more knowledge and understanding of what custody is and how and what protection actually exists in this space. Thanks for joining us and hope you enjoy the rest of your day at the Digital Intelligence Forum. Thanks, Amy Rose. I will hand it back over to you.
Thanks, Charis, Ryan, and Harrison. It really did identify that custody sits at the center of digital asset security.